Good afternoon, everyone. Thank you for attending part 2 of the cybersecurity webinar series, Protecting Your Business from Fraud. They say fraud occurs when there's the presence of opportunity, motivation, and rationalization. Today, you'll hear from our panel of advisors who will discuss some controls that a business can implement to reduce the risk of fraud and what steps a business should take when they do have fraud occur. My name is Mardik Taslakian with Signature Bank, and I'll be moderating our discussion today. Our panel consists of John Bamford, Laura Buitrago, and Carol Meinl. John is an attorney with Nevers Palazzo in Westlake Village. Nevers Palazzo is a full-service business law firm specializing in business transactions and litigation. John is a litigator. He focuses his practice on representing businesses and business owners in all types of disputes. John also has 15 years of experience representing businesses and individuals in the financial services field, including representing brokers and broker-dealers in FINRA arbitration and regulatory investigations. Handling and protecting sensitive personal information has long been a core concern of businesses in the financial services field, which is why John has extensive experience with this topic. Laura Buitrago, CPA, from Singer Lewax Business Solution. It's from Singer Lewax Business Solutions Group. The Business Solutions Group provides digital outsourced accounting and consulting services to businesses. Prior to working in that group, Laura was in the audit department at Singer Lewax for 11 years. And afterwards, she worked in private industry for 4 years as a CFO for a fabrication company. In being an auditor and then working in private industry, Laura has experienced how the right internal control systems can mitigate the possibility of fraud from ever occurring. Finally, Carol joins us from Signature Bank. She's the cash management area sales manager for the West Coast. She has 13 years of banking experience and treasury management experience, most recently expanding Signature Bank's cash management program to the West Coast. Prior to Signature, she was with Wells Fargo for 11 years, where she saw her fair share of fraud at both the consumer and the commercial levels. So before we begin our questions for our panelists, I want to let the audience know that if they have any questions as they're participating, please go ahead and use the Q&A box that you'll see on the lower section of your Zoom. Type out that question. I'll be monitoring that box and making sure that your questions get answered to the best of our abilities. So with all that being said, let's start our panel discussion. There are many ways of protecting your business from fraud. And one of these ways is to build robust internal controls around your finance function. Laura, can you briefly explain what an internal control is and the most common types of internal controls for a business? Oh, Laura, you're on mute.
Thank you. Thank you, Mardik, for asking that question. Totally excited to dive into this. So basically, every company should have and needs an internal control framework, which is basically made up of rules, procedures, and mechanisms that are geared towards safeguarding your business's assets. You want to make sure you're looking at all accounting procedures. So you want to look at sales, expenses, payroll, inventory, cash, of course. An additional benefit to having these internal controls is they also help streamline your operations and improve the accuracy and timeliness of your financial reporting. So there are two broad types of an internal control: preventative and detective. So to go into that, a preventative control is designed to deter error or fraud from happening. So just to give you some common examples, physical access controls is one of them. So that means something as simple as making sure your blank checks are locked up and only certain people have the key to open that lockbox with the blank checks. Another example of a physical access control, some of you might have attended, hopefully, our webinar from a couple weeks ago, which is on cybersecurity. So we had a special agent from the FBI come out and talk about cybersecurity and other common frauds and scams. That being said, the right IT controls in place is a wonderful line of defense. Making sure you have passwords in place to access your network, emails, accounting software, any other financial application. We can probably do an entire webinar on that alone. And I am not an IT expert, but I know enough to be dangerous, and I've seen enough. I encourage you folks to really look at your IT infrastructure to make sure that you're taking advantage of the best practices in IT security. IT is changing every millisecond, so you want to make sure you're up to date on what are the current frauds and scams that you could be susceptible to and get your controls in place. Another example of a preventative control would be the segregation of duties, which is probably something a lot of you have heard of. Pretty basic control where you make sure that your accounting tasks are split between two people, that you're not relying on just one person to do everything. A very simplified example would be the person who is able to write checks is not the same person who does your bank reconciliation. That's one example, many other that I'm happy to discuss with anybody. The biggest challenge in segregation of duties, some of you folks might feel your accounting department is too small, or only one person is in your accounting department. So how can you do a segregation of duties? There are still ways around that. A lot of procedures that you can employ. Feel free to reach out with any questions. Our emails will be up at the end. Feel free to reach out, and I'm happy to discuss any of those with you. That could also be another webinar. So lots out there. Of course, with preventative controls, you also want to make sure you have authorization and review protocols in place. So review and sign off on all vendor bills. Review bank statements. Once they're issued by your bank, make sure you take a look at them. These are all great ways to just keep an eye on your assets. So the second one I mentioned, there's preventative, and there's also detective controls. So these are the backup procedures that are designed to catch errors in the event that something might have squeezed past your preventative controls. So the biggest example of a detective control is obviously reconciliation procedures. So hopefully all of you get your bank recs done, and they're done within a day or two after the bank closes the month. Always a wonderful control to have in place. And some of you might even want to consider a daily cash reconciliation. It depends on if you're a business that has a high volume of cash movement. I would highly recommend doing a daily cash reconciliation. The company I worked at, we did that, and I've seen a lot of clients do that. And I think that's really effective as well, to be able to find something that might have squeezed through, but find it quickly, and then you can take action. Another thing that I don't see a lot of businesses do, and I think it's very important, a wonderful detective control kind of goes into the payroll processing aspect. Review your payroll reports. Make sure you recognize the names of the employees on that report. And another thing is make sure that no unauthorized bonuses were paid out. I think payroll causes a lot of opportunity for misappropriation of cash. I actually had a client call me the other day. Now, I do want to say we do not process their payroll for them. They do have a payroll clerk on staff, and even a VP of finance. And they actually came to me and said, there's this one employee I don't see on the payroll register. Can you research how this person's getting paid? Because they're an employee. Only to find out that this person was actually being paid under the table. And the VP of finance knows about it, and it was kind of doing it as a favor. So again, reviewing that payroll register, you can make sure you recognize the employees, make sure there are no ghost employees, or even you might notice that somebody is not on there. So really, to sum this all up, the key to all of this, you just want to have a framework in place to control the risk, to make sure you as a business owner have control, to possibly mitigate or detect any occurrence of fraud. Nothing is 100% guaranteed, but at least you have control and can take action to mitigate.
Thank you, Laura. There really is a balancing act between control and convenience, right? Especially for a business owner who's got so much on their plate. With that balancing act in mind, what are 3 things every business should consider when building their internal control systems?
I did mention that you want to make sure you're looking at all facets of your accounting and make sure you have controls in place over that. But we are going to talk about cash today. So I would start by building internal controls over your cash. Make sure you have authorization or spending limits. So for example, John Smith is a check signer and he's able to sign checks up to $5,000. Anything above $5,000 would need 2 signatories on the check. And I know that Carol here will talk about that aspect and just how banking can help with that as well. But that's where I would start. Also, I would restrict the number of people that can access your online banking system and have access to, as I mentioned, blank checks, and segregate the way cash is managed at your company. So one example is Jane can process the deposits at the bank, but John is the one who enters that deposit in your accounting system. So that way you have 2 people kind of touching things there. I would also, another thing that I'm not sure that people think about is when you have an employee leave your company, make sure that you have removed any access to the network, the emails, the bank, any software or application that you use, and make sure it's done that evening. That's really key, I think. The second thing is that I did mention that making sure your security controls over your software are robust. So one thing you can do is train your employees on how to spot phishing emails. And we're going to talk about that more in a minute. But there are some training programs out there for a pretty low cost that create videos aimed to train people to be aware of risks on email scams. I will say yesterday, and I'm not exaggerating, it was yesterday, we had a client call us. And this is another client where we don't handle their payroll. But their payroll clerk received an email from one of the executives saying, I want to change the direct deposit information for my paycheck. And the payroll clerk actually hit reply and said, sure, send me your new banking information. They got an email back with new banking information. They went on the payroll processing software system and changed it. Well, thank goodness that software actually had a control where it emailed the executive saying, by the way, did you know you had a change in your profile? And it sent a text actually to the executive. The executive immediately reached out to the payroll clerk and said, I haven't changed anything. So that's one of the scary things is there's a lot of email scams where actually hackers are going into your email system and they are able to send an email from your Outlook, let's say, and then they create a rule in Outlook where any replies to that email are rerouted. So you never even realize that there's emails going back and forth, correspondence that you're not actually seeing in your inbox. So go ahead and check your rules right now. Make sure you recognize all the rules that you have set up in your email. One of the things that we stress when we help a client process payroll, we do like to reach out to the recipient directly and confirm their banking information over the phone, as opposed to relying on emails. We figure out a way to make sure that we know we're talking to that person. But what I want to stress is don't rely just on emails because there's a lot going on there. And also just verify, verify, verify. Another thing that I would like to mention is that there's a lot of software applications out there that use multi-authentication methodologies for security. Take advantage of some of those. And then lastly, to be effective, you want to make sure that your internal control is designed to remove the opportunity for error. Be flexible. As you grow your business, you need to look at your internal controls and make sure that they are flexible and responding properly to your growth as well.
Thanks, Laura. Verification is key, I think, right? I think the old-fashioned the original two-factor authentication, pick up the phone and verify information, right? It doesn't cost you anything. It's a good common practice. Any type of financial information that's being passed on from email could be compromised. So pick up the phone. It's simple as that. And it's a lot of these simple things that go a long way in, in making the difference between being susceptible to fraud or not. So you mentioned that cash controls are a key internal control consideration. So let's talk banking for a minute. Carol, when considering electronic bank access, what access controls and what protocols should businesses expect to see from their banks and their financial institutions?
Thank you, Marty. So a robust treasury management or cash management offering from your banking institution should include both good policy guidelines as well as products built for security. So I'll give you a couple examples of good policy guidelines. Banks should offer dual control options, meaning give the client the option and also encourage one to allow for an inputter-approver process. This could be used for the creation of templates and also for the actual sending of the wires and the ACH. By having one person do it and another person approve it, it just allows for a second person to take a look at it and make sure that everything's keyed in correctly, that nothing has changed from the last time you sent something, and it just allows for a secondary touch. Our bank, actually, we can set up, most popular is one person input, one person approve, but even if you wanted, you can have, 9 different approvers if you really wanted. So your bank should allow you that type of option. There's also token validation. So we have hard and mobile tokens available for our clients that are designated as approvers for wires and ACH. You might be familiar with those little keychain fobs. That's the token that I'm talking about. That's going to be an important piece of security for you because, oh, there you go. Thank you, Martig. Martig is showing an example of his token here. And, it's a secondary validation that now you're the approver, you've logged in with your correct credentials. Let's just make sure one more time that it is truly you. So we ask you to enter in the token passcode that appears on your token. Another thing that your bank should discuss with you is establishing user and account dollar amount limitations based on your typical banking activities. We don't necessarily, if maybe a $300,000 wire is your typical activity, we don't necessarily want to set you up with a $20 million wire limit, right? We want to make sure that the limit that we allow for you gives you enough buffer to allow you to do your daily banking activities. But also, we want to make sure that we don't allow it to be too high and that we set it around we understand your business, we understand the growth of your business as well, and we also look at previous banking statements to make sure that it is in line with everything. Another one is also recorded line verifications and first-time beneficiary validations, especially over certain dollar amounts. So your bank should be asking you through the recorded line verification and first-time beneficiary validation that have you personally validated the wire and ACH instructions? Have you personally validated not only by your email, but also by picking up the phone and calling, right? Kind of talked about that a little bit earlier. Other good ones also involve flagging logins from IP addresses outside the country, or even one-time authentications for when one is logging on using a new device. You guys might be familiar with that, logging onto, your Google account and it's a new device or it's a new cell phone or you've cleared your cache and cookies. And so they want to give you a call or send you a text message to make sure that it's really you. We do that here as well, as should your own bank. It's important because, you know, we don't want somebody that has hacked your system or hacked your credentials to accidentally be able to log on. I actually had a client who was experiencing check fraud. In speaking with the person who deposited that fraudulent check, it turned out through the story that they were telling me that they were depositing a check received from their boyfriend, a seemingly known voice. And as they were talking to me, they're like, yeah, you know, I'm in Alabama, but it turns out the IP address was in Nigeria. So, you know, ended up being actually a large fraud scheme where I saved the client and the bank $150,000 after you count up all the checks. From a product perspective, banks offer services that you might be familiar with: Positive Pay and also ACH Selective Item Processing, also known as ACH Positive Pay or ACH Fraud Filter, which when used with the good controls will ensure a higher level of safety. Positive Pay basically confirms that all the checks that are clearing through your account match up to your check list. It can validate that the checks are coming through matching the date, the check serial number, dollar amount, and even the payee name. And again, make sure that it matches all of your records. I think Laura was talking about 2 signatures on a check. Now, the 2 signatures on a check, while you know, it would be a good practice, it is difficult for a bank to check all of the checks that come through because there's millions of checks that hit the bank every day. So setting up Positive Pay to verify the date, serial number, dollar amount, and pay information is going to be the best way to protect you from check fraud there.
Carol,
fraud filter. Yes.
Sorry, in regards to 2 signature checks, and I apologize for interrupting, but I think it might be worth noting, yes, banks are not going to catch every single one, you're right. I still encourage clients to do it. It sets up an additional internal control. It sends the message to others in the company that, hey, I can't get away with this potentially because there's this obstacle in place. So the mere fact that the appearance of the obstacle might be enough to discourage you know, something bad from happening.
Exactly. Exactly. That's a good point, Marty. Thank you. Yep. And then ACH Selective Item Processing is going to do basically the same thing, except now it's not for the checks. It's for the ACH debits that are coming out of your account. Through that service, you would establish an approved vendor list, and it has the names and IDs and dollar amount limits for each vendor that you are okay with debiting from your account. Whoever's not on it is going to be considered an exception, in which we would ask you if you want to continue to pay or reject that item. So the benefit with that is that you have the bank's products to do this validation for you instead of you necessarily, you know, spending time reviewing each transaction for its validity. So I would encourage all of you to definitely have a conversation with your banker so that they can understand your needs and understand your risk for fraud. It may sound like it's a lot of, you know, controls and things when you need to send $5,000 to somebody, but you need to know that once the money leaves the bank, it's kind of hard to get it back. So taking an extra 5 to 10 minutes to double check things, go through these extra verifications will save you in the long run because it's $5,000 that you just lost, but you still owe that $5,000 to whoever you needed to pay. So now you're out double the money, and who knows how much more.
Thanks, Carol. In terms of wire transfers and trying to get your money back, I recall on the first part of our webinar, the FBI agent was actually a little bit more encouraging than I've seen personally. 99.9% of the time, if that money is wired out, it's going to be impossible to bring it back in. So it is almost kind of very, very dangerous to do that. So question from the audience. A business owner is looking for some advice on how to give access to key trusted advisors like accountants or other firms that they work with that require some of this sensitive information. What's some best practices in terms of giving access to these folks outside of the company?
Well, I could go ahead and answer that question. Carol, you might have some insight, but I know that when we take on a new client and they want to give us access to their payroll system, to their bank account, things like that, they usually introduce us right away to their customer service representative at the bank. If they don't have one, I encourage them to get one, or I even introduce them to somebody I might know, because that way the person who is helping you with your banking is aware that you do have an advisor or a third party accessing your bank account. And so we usually like to get our own logins. That way things can be monitored and tracked. So that would be a suggestion that I would give.
Very nice. Don't ever be afraid, guys, to introduce people to your banker. We find it much easier to do business with a client when those introductions are made ahead of time. And if we've got a question, for instance, that our client can't answer, but hey, I know the CPA because we were introduced, I'll go directly to the CPA and ask that question. So it makes life not only easier for everybody, you get business done a little bit faster, and it's good that your advisors know each other. Now let's talk. Look, the inevitable happens, or ultimately, even with best practices in place, fraud still occurs. A company gets hacked, either client information or financial information or other sensitive information is breached. What do they do next?
Yeah, so from a banking perspective, a company should definitely immediately notify their bank right away. Some of the things that you can expect from your bank is just closer monitoring of the accounts for potential fraudulent transactions now that we know an event has occurred. Maybe changing the account numbers, urging users to change their passwords, and then also review preventative measures. This would be, everything I talked about earlier, reviewing dual custody settings. Do we need to make them stronger this time? Setting up those fraud preventative services like the ACH fraud filter and check positive pay. Maybe you want to sign up for alerts now, setting up alerts to tell me that a wire has gone out or a wire approval is pending. And again, just reviewing account and user limits, making sure that not only the dollar amount limits are there, but making sure that each user who is an importer or who is an approver, that is still the case. Hopefully, some terminated employees or employees that have left the department are not still accessible with credentials to the banking access. I'll kick it over to John. I think John has some additional insight he could share as well.
Yeah, thanks, Carol. So the prevalence of data breach incidents is unfortunate, but fortunate in a way that it has now created an accepted framework as to how you respond to such incidents. 5-10 years ago, we were all kind of flying by the seat of our pants and making it up as we went along. Now, with the institution in California of the CCPA, California Consumer Privacy Act, as well as the upcoming CPRA, California Privacy Rights Act, that's not in effect yet. There's a legislative framework as to how we deal with data breach incidences and what we're supposed to do. First step is investigation. And the threshold question there is, do you hire a third party to conduct the investigation, or do you do the investigation internally? Many companies are not equipped to perform such an investigation internally. They don't have the expertise or the manpower. A large bank, Signature Bank, might be in a position to, perform an internal investigation of this type and do it well and get it right. So if you find yourself in this circumstance and you're not quite sure what to do, rely on an outside expert, a law firm who has experience in doing this. There are also cybersecurity experts who specialize in responding to these types of incidents. So the investigation is going to be focused on a couple of things. The first of these issues is what type of information was accessed. And we're looking at what's called personally identifiable information, or PII, because the law loves acronyms. This is what we think of traditionally as like Social Security number, driver's license, credit card accounts, financial accounts. But under CCPA and federal law, it has expanded to encompass a larger trove of information that you might not think of as personally identifiable information. IP address, health information is covered. So there are businesses who are subject to CCPA regulation that might not think they are because they don't think that they deal with personally identifiable information, but a lot of businesses do, more so than you think. The broad definition under the law is any information that has identifiable information, relates to or describes or is reasonably capable of being associated with a particular individual. And so you can see how that's a broad definition. So step one of the investigation, you're looking at what kind of information was accessed. Was it account numbers? Who was affected? How many individuals were affected? When the breach occurred, and how it occurred. So that's the substance that you're trying to determine from your initial investigation, because these are going to relate to your subsequent reporting requirements. The next step in that chain of events is should you report the incident to a law enforcement agency? It's not required unless there was an incident that affected 500 or more California individuals. If you have an incident that affects 500 or more California individuals, it has to be reported to there's a division of the State Attorney General's office that handles these cases. You have to report it in that instance. Otherwise, it's up to you. I would suggest that the best practice is to report it to applicable law enforcement agencies. The reason that people don't is because they think that it's going to increase liability. It's going to make it a higher profile event than it otherwise would have been, and it might subject them to scrutiny that they otherwise don't wish to have. I don't think that any of those things are actual legitimate concerns contemporarily. I've had incidences where the reporting to law enforcement agencies has actually been extremely beneficial. One recently where we found out that the data breach incident was a result of an organized ring that was under investigation by the FBI. And it provided us and my client with additional information about how the breach occurred, what the target was, and how to address it in the future, and how to advise the customers how to deal with this. I'm also finding that because this is a more prevalent issue, customers are less put off by these notices. It used to be a big deal. It was covered in the news. And you'd get one of these notices. And the company would think, this is really going to damage my reputation. It's going to damage my relationship with customers. This really makes us look bad. Unfortunately, because it happens so often now, we're finding that there's very little effect on customer relationships or creating a negative perception. So the conclusion there is, I think, best practice, report it to law enforcement agencies. The next step is notice. And that's the big one. That's, that's that this happened, your customers need to know that this happened as well. The people whose sensitive, identifiable personal information have been compromised need to know so that they can be protected. There are specific requirements that are outlined under the CCPA and that are going to be slightly modified by CPRA. CPRA doesn't go in effect until January 2023. But if you're looking at establishing protocols right now, you should be looking forward towards what's going to serve me for the next few years, instead of what's the bare minimum that I need to do right now. So when does a notice to customers need to be issued? It's not only when when personally identifiable information has been lost as a result of a data breach incident. It's also when access to that information could have been gained. So if your network is compromised, if passwords are lost, that seems like, from a common sense perspective, it seems like, yeah, we dodged a bullet there. No information was lost. But if it created an opportunity for the loss of information, a notice has to be issued. And you can say that, to the best of our information, no information was lost, but there's still a notice requirement there. Even if you dodged the bullet, you lost some passwords, your encryption credentials were compromised, we're still issuing a notice. Like I said, if there was an incident that affected more than 500 California residents, you need to report it to the state attorney general's office, and you need to provide them with a copy of your notice as well. They're going to scrutinize that to make sure it was done correctly. The contents of the notice: company name and contact information, the name of the affected individual, the list of the information that the company reasonably believed was compromised, the date of the breach, whether there was a report to law enforcement agencies, and if the notice to consumer was delayed as a result of a law enforcement request. That happens sometimes. And then referral to a credit reporting agency if the breach exposed Social Security number, driver's license, California ID, financial information. Best practice typically is to provide that referral to credit reporting agencies, regardless of the type of information that was lost. And under certain circumstances, companies are obligated to provide credit monitoring services at no cost for a certain amount of time. I think many of you have maybe received those notices in the past, where you have an offer of 6 months of free credit monitoring services because your account information was compromised at Target or whatever. So that's the content of the notice. The notice has to be issued as soon as possible. So when you reasonably believe that an incident has occurred, you have to get into gear immediately, conduct your investigation, and provide your notice. Notice also has to be posted on your company website for at least 30 days following the incident. So I've provided an outline of the contents of the notice and the process, but there are really specific statutory requirements that might seem silly to some degree, including the size of the font on the notice, where it has to be displayed on your company website. So for that purpose, it's best practice and almost necessary, if you want to get it right, to engage the services of a third-party expert to handle these issues. Like I said, there are lawyers who do this. I do this. There are cybersecurity experts who are not lawyers themselves, but are trained in compliance and have certifications that do this as part of their services. That's another option. What are the liabilities that arise from this type of breach? Two categories of liabilities: penalties issued by the government, So your penalties are going to arise twofold. Non-compliance with CCPA requirements. So CCPA is going to require you to take certain steps to safeguard consumer information on the front end, right? So if you are a company that that stores, sells, or uses sensitive consumer information, you have to take certain steps to safeguard that information. So to the extent that your breach was a result of failure to comply with required safeguards, that may result in a penalty. But if you're an innocent party who did all that they could do and lost sensitive information, that's not going to result in a penalty. Messing up the notice, that's going to get you a penalty too. Okay, so failure to abide by all of the particulars of the notice requirements, that's where a lot of companies, run afoul of CCPA and federal guidelines and get themselves penalized. There are civil liability issues to your customers. Those are going to be governed twofold contractually. So you can do your best to safeguard against customer liability with contractual drafting, and I think we'll talk about that in a subsequent section here. But ultimately, it's going to be sort of a negligence standard, and which is, did you have a duty to safeguard information, and was that information lost as a result of your breach of that duty? So, not a bright line. It's it's circumstantial. It's case by case, but the reason that it's important to safeguard information on the front end and to implement controls on the front end is because the prospects of getting recovery after this has happened from your financial institution or from a company that had your personal information is not great. So that's why the things that Carol talked about and the things that Laura talked about earlier, how do we prevent these things from happening? That's why those issues are so important, so paramount. We want to know how to deal with it if it happens, to us as a consumer or, as a business owner, we want to know how to deal with it. But, those front end safeguards, that's the real magic. That's where we're really going to be, doing ourselves the biggest favor, because, when a business comes to me, I can do my best to protect that business as the person, as the business who lost that information, or sometimes they're the victim, and the prospect of recovery is not great. So that's why that is important. Yeah, so that's the basics of what we do in response to a data breach incident.
John, in terms of the prospect of recovery, that's kind of an interesting way of putting it. I'm curious because once a client leaves our office, we don't really, a lot of times we don't see what's happening afterwards. But as a banker, more than once I've talked or tried to talk somebody out of doing something that's like rather obvious. One of my clients, a 65-year-old widow, liquidated her inherited IRA and sent it to her new boyfriend, who works on an oil rig in the Atlantic, and they don't have good internet reception, so that's why she can't do a video chat with him. But his emails come through, and he needs a little bit of money, and this poor lady lost $350,000 of her life savings to that. And when these, once they leave our office, if they get an attorney involved or if they try some type of recovery, what are clients facing out there after the fact? What are they seeing? What are they experiencing?
Yeah, so I'll tell you, I'm typically on the side of representing businesses, and in particular financial institutions. So I see the financial institutions side of this. So typically it will be a customer of ours who's come to us after they've been subject to fraud, and have lost some money, and the customer relationship with the bank is primarily a contractual relationship. All of those documents that you sign when you open your account opening, information that we all kind of speed through and sign and hand back over, pages upon pages, those dictate the obligations that your financial institution has to you in terms of protecting your information, and also what kind of recovery you might be able to get in the case of fraud. And it's the prospect is not good. I'll tell you an example of an incident where I was on the other side. We had a longtime client who was a successful business, but started as a small business, and they grew over a period of years, and they were doing fantastic, making tons and tons of money. Ultimately, they found out that their controller was embezzling money from them over a period of many years. And the way that they were doing this, we found out, was they were issuing checks from the company to pay fake vendor invoices, and depositing those checks into an account that they opened in the name of that vendor. And so sometimes there were endorsements on the checks, sometimes there weren't. They were depositing them via ATM. And because the company, grew rapidly, they didn't have controls in place. Many of the controls that Laura talked about earlier, could have saved us here. They didn't have a separation of responsibilities. There was one person who was doing bank recs and paying invoices and had control of all of the accounts, because they started as a small company and there was one person doing it. And then when they got successful, there was still that one trusted employee who was doing it. And unfortunately, that one trusted employee was taking millions of dollars from them over a period of 5 years. We went to the bank after discovering this, and said, like, hey, you allowed this person to open an account in a name that was not their own name, and they deposited checks that were to a vendor that didn't exactly match the account. So like maybe it was we were paying a legit company, ABC Inc., and they opened an account called ABC LLC. And so they were depositing these checks, and we didn't do very well. I'll tell you. Ultimately, of the millions of dollars that were lost, we reached a settlement with the bank, but it was pennies on the dollar, and it was, for the bank, it was to avoid further litigation with us. But I think that if we had taken it, to the mat, had a full-blown trial, I think we probably would have lost. And it's in a situation that sounds egregious, where you're like, hey, the bank messed this up, they messed this up, they messed this up. But if you actually go into the details, look at the account agreements, look at what was done, look at what the bank's obligations were to provide supervisory services on those issues, they probably came out okay. So
John, the banks are well protected. Clients should be well protected as well. what language should be written into customer business contracts that will better protect the company in the event of fraud or cybersecurity?
So you can't 100% eliminate your liability as a result of contractual drafting. So what you want to do if you're a financial services business, I'm probably not talking to you right now, because this is probably an issue that you've got solved. What we want to talk about in terms of contractual drafting that's important for regular businesses is that if you're a business that deals with personal identifiable information, if you're a business that's subject to CCPA regulation or upcoming CPRA regulation, any vendor, any third party that you do business with, you're responsible for their use of that information as well. So you need to, it's a strict liability standard. If you choose a vendor to do something for you and they have access to that information, if they lose that information or they don't implement proper controls, you're responsible for that. So you need to, in your vendor relationships, you need to build in the CCPA requirements saying, I'm subject to this type of regulation, and by doing business with me, you are too. You have to implement, controls on the front end to protect personally identifiable information. You, to the extent that there's a loss as a result of your activities, you have to indemnify me. That's an important part. And you need to make sure that your third-party vendors are not only implementing controls, but you need to affirmatively monitor those controls. And you need to build in safeguards that require them to report to you regarding what they're doing, how they're safeguarding information, and and verify, like on a more than annual basis. Yes, we're still able to comply with the requirements. We're still doing this. We're still taking steps to protect information. So that's primarily what the audience here needs to know about working with third-party vendors.
Thank you, John. I appreciate it very much. Let's move on a little bit. Smishing, which is fraudulent text messages, it's a thing. Vishing, which is fraudulent calls, and phishing, which are fraudulent emails. All of them are on the rise, especially during the pandemic and everybody working from home and the reliance on mobile technology. Can you guys talk about some common fraud attempts that you've seen over the past year and a half?
Yeah, absolutely. So phishing is one of the most common forms of bank fraud, as it allows the fraudster to attempt to learn high-value sensitive information like account numbers, online banking passwords, and PIN numbers. So, for example, you receive an official-looking email saying your account was frozen due to a fraud attempt, and you need to click the link below to change your password. A bank is never, I can pretty much say never, going to send you an email that tells you to click on that link. They're just going to say, go log in to signatureny.com. So it makes you to just open up your own browser, type in, that, or have your bookmark for signatureny.com to log in and, review your account, right? So don't click on any links, especially if it's coming from an email that maybe you don't recognize. Another common email scam is a call to action that could result in major losses. So you might receive a wire transaction instructions from a vendor. Unbeknownst to you, that vendor's email has been hacked. The fraudster now has details of your business with the vendor and sends you the wire instructions to a bank account that the fraudster controls. Other red flags include instructions to don't call to verify this information, misspelled words, poor grammar, or a different tone to the writing than what you're used to. Maybe it's coming from the CEO. Does the CEO actually email you? Or usually you get your wire instructions from your operations manager. Just, sometimes it's a little bit of common sense. Just think about it. From my perspective, the sentiment here is trust, but verify.
Well said. From a legal or an accounting standpoint, anything common that you guys have been seeing?
I know I've mentioned a couple of examples during this session, but we're seeing a lot with the fraudulent wire, and also what Carol mentioned as well. And again, that's why we insist on calling to verify. And one thing I do want to say is, when you call to verify, have them actually recite the account to you. Don't give them the yes or no question. Is this your account information? Don't do that. Have them recite it back to you. We are seeing, as Mardik said, with everybody working from home, virtual, everybody's now relying on emails to communicate more than ever before. So let's not forget that the phone is there, and let's pick it up. Another thing we have seen is a lower level employee getting an email from the CFO or CEO asking them to purchase gift cards and send me the activation codes. So again, as Carol said, is that something the CEO or CFO would actually do? And why? For what reason? So definitely these phishing emails we see all the time. As I mentioned, one yesterday with a client of ours.
Thank you, Lara. I didn't know about the activation codes. That's an interesting one. That's a new one for me. We only have about 2 minutes left. I do want to encourage anybody in the audience, if you have any more questions, to please type them out now. We'll be putting the names and emails of our panelists up here in a moment. Reach out to us. If there's any questions, whether it's banking, accounting, or law related in regards to cybersecurity, we're here to help, and we'd be happy to do so. So here's that contact information. If you reach out to any one of us, we can make introductions to the others as well, if need be. So that's not a problem at all. So we just want to wrap this up by saying thank you to all of our attendees today. I hope that you guys found it valuable. If we can change one little thing in terms of your approach, I think it's already been worthwhile. So fraud prevention is really about a lot of small things adding up to a overall sense of safety and security. So please keep that in mind. We want to thank Singer Liwak, we want to thank Nevers Palazzo, and of course Signature Bank, and our panelists Lara, Carol, and John for their help and expertise today. Thank you all for attending. We'll talk to you soon. Take care. Bye-bye.
Thanks, everyone.
Thank you.